Hey guys, it's Dan here. It's 3 p.m. The markets are slightly up. Gold made its rebound after Asian markets pummeled it down a little bit, same with silver. And that was all in response to Ben Bernanke's speech yesterday. Anyways, I'm just going to give you a little advice and guidance on where you should be allocating your resources in this tumultuous market activity. In my opinion, you need to be moving your assets, resources into safe haven assets and equities, such as your defensive stock plays like Walmart, Johnson & Johnson, Coca-Cola, McDonald's. These are all stocks that pay nice dividend yields well above the 10-year treasury, which is just atrocious, and that's going to experience a collapse sometime in the next year or two. Anyways, that's part of my portfolio advice. You need to be divesting away from risky financials such as JP Morgan, such as Goldman Sachs, Deutsche Bank, any of the big banks. Do not touch them. Don't even think about touching them. I know they look attractive now. Don't even think about it. If you're going to go financials, look at some of your regional banks. Look at Wells Fargo, PNC, some of these other plays that aren't really invested in a lot of the derivatives that JP Morgan, Goldman Sachs, Citigroup, Citibank, Bank of America, these sorts of banks, they like to invest in exotic derivatives, and they've done it in the past, and they still have it on their balance sheet. So I highly advise staying away from them. Also, be careful investing into tech and social companies. As you've seen, Facebook was just a laughable event. I try to tell people not to get into the hype because I thought it was coming out overvalued. I mean, 100 times earnings is pretty overvalued in my opinion, and you see where they are now. Um, Anyways, so that's one part of my portfolio strategy is to allocate at least somewhere between 20 and 50% of your portfolio to these sort of defensive moat building, I like to call them, stocks like Walmart, Johnson & Johnson, and these sorts. They only increase in economic upheavals. People need these necessities. They go to Walmart. It's a cheap place to go to shop. You can always find products there at a reliable time and fashion. And Johnson & Johnson creates all sorts of products that people need to buy. And McDonald's has always done well just because they're a solid company and they have extreme growth in China. That's another reason why I love the McDonald's play. They're just going to do phenomenal in China. I cannot stress that anymore. And the other part of my portfolio strategy is to allocate at least somewhere between 15 and 25%, depending on your risk, towards precious metals. And I don't think it's actually that risky of a play. I think you can pick up the metals, the mining companies, particularly at a good price right now. They've lagged the physical futures market tremendously. Silver right now is somewhere between 55 to 1 in a gold to silver ratio. Traditionally, the last 3,000 years, silver traded between 15 to 1, which is the natural geological extraction rate. So you could see a huge pop in silver. I'm not saying silver is more valuable than gold. I'm just saying they're both undervalued in my opinion, and silver might be more undervalued. So my number one silver stock pick, my 5-star silver stock pick is Silver Corp. The ticker symbol is SVM, Silver Corp. It's a Canadian-based company. They're the first North American company allowed entry into China. And this presents a big opportunity because China is the third biggest miner of silver, so that's tremendous. And they're also a little bit more green of a company. Dr. Fang, who is the CEO, has actually great connections with local Chinese jurisdictions and officials. So, and they actually love SVM because SVM likes to buy up some of the other miners that are there in China, and then they totally change and reorganize the infrastructure to a more sustainable approach, more environmentally friendly, I must say, too. So that only looks well for the Chinese officials that allow Dr. Fang and SVM to come in and do this. They also have 78.8 million ounces of silver proven and probable reserves. Now this is important to note because that's a 36% increase over 2011. They also have no debt. They have tremendous opportunities in China, so I can't stress that enough. And they don't hedge, so you have all the upside in the world. which is good because most mining companies that hedge don't make a big profit. So anyways, Silver Corp, SPM, it's around $6.50 a share, I think, right now. It's a tremendous buy under $7. Tremendous buy, tremendous opportunity. All silver mining companies right now, and gold for that matter, are tremendously undervalued. My number one gold pick is Kinross Gold. It's around $8.20 a share right now, and they've been battered recently in the news over the $2.9 billion write-off they had to take on their Teosest Mauritania mine. And to me, that was a very conservative write-off because they based it on a silver ounce price around, I think it was $13.50 an ounce. So I don't see gold returning to that price level. Had they based it off of $1,400 an ounce, they wouldn't have written it off. So to me, it's received a lot of negative feedback that just wasn't deserved, and actually gives you an opportunity to pick it up at a good price. So these are the two silver and gold plays that I would like you guys to see to make: Silver Corp and Kinross Gold. Kinross is KGC, and it's also a Canadian-based miner. And if you want to go really safe with your money, SLW is a good play. Stay away from GLD and SLV. I cannot. This is the most important sentence or part of the segment that I'll make. Stay away from GLD. Stay away from SLV. Those are ETFs. I don't like ETFs, and there's a lot of uncertainty around if GLD and SLV are actually holding the physical bullion in their vaults. There's a lot of questions concerning that. So if it's found out that they're not holding it, those are going to crash. So I would stay away from that. I would like to hint at PSLV and PHYS, which is actually similar to SLV and GLD. It's just that the physical is actually there. It's run by Eric Sprott. He's a tremendous fellow. So check those out. Anyways, that's enough for this video, and I'll keep it at 7 minutes. And I'll let you guys shoot me any questions or comments my way. And I'll continue to give you market updates and insights and investment tips as the days go by. Alright guys, follow me on Facebook and YouTube and Twitter. Alright, appreciate it. Have a good one.